Profitable swing trading is all about capturing bigger market moves while avoiding the constant stress of day trading. If you've been searching for the best swing trading strategies for 2025, this is the video for you. Today, I'll show you exactly how to swing trade using a powerful trading view indicator, making it simple and effective for both beginners and seasoned traders. We'll be combining market structure with volumetric order blocks, both of which are part of LuxAlgo's premium all-in-one indicator, to create a strategy that's perfect for mastering swing trading. If you're excited, don't forget to leave a like. Let's get into it. By the way, to ensure this trading strategy is reliable and worth your time, I've tested it 100 times. So make sure to stick around until the end of this video where I'll give you a complete breakdown of my trading results. To get started, we need to set up our indicators on TradingView, the platform I'll be using for this strategy. First, load the trading security you want to work with. I'm using the hourly time frame for EURUSD, as it's ideal for swing trading. Now, let's add the indicator. To add the indicator to your chart, click on Indicators and search for Price Action Concepts by LuxAlgo. This is a premium indicator, and you can test it 30 days risk-free using my link. Now click to add it to your chart. Before we get into customizing the Price Action Concepts indicator, let me first give you a quick overview of what this indicator is and how it's going to be used. This all-in-one toolkit automates essential price action techniques. Whether you're trading based on smart money concepts, ICT, or pure price action, this indicator takes the heavy lifting off your shoulders. Instead of monitoring your chart all day, you can let it do the work for you automatically. Let's start with market structure, which automatically detects real-time market trends using two key concepts: change of character and break of structure. In the indicator settings, you can enable both internal market structure for shorter-term insights and swing market structure for identifying longer-term trade opportunities. Next, the volumetric order blocks highlight key price areas where major market participants accumulate orders. By default, up to 5 order blocks are displayed. Bullish blocks appear below the current price action, while bearish blocks appear above. By checking the green and red bars within each order block, you can instantly see whether there are more buyers or sellers. Additionally, the metrics displayed on the right-hand side reveal which order block has the highest volume, making it the most significant, and which ones are weaker and more likely to fail if the price revisits those levels. The indicator also includes liquidity concepts, such as trend lines, equal highs and lows, and liquidity grabs. These tools identify areas of high market activity and potential reversals, giving you a deeper understanding of market behavior. Another standout feature is the imbalance detection system, which identifies areas like fair value gaps, inverse FVGs, and volume imbalances. One commonly used trading strategy is waiting for the price to retest a fair value gap, which can provide highly profitable trading opportunities. Premium and discount zones are another valuable addition, dividing the chart into upper, central, and lower areas. Finally, the Fibonacci retracements tool allows traders to analyze key support and resistance levels, such as golden pockets. It uses customizable Fibonacci ratios drawn from swing points, imbalances, or even premium and discount zones. This feature helps traders identify optimal entry and exit points, making it a crucial addition to any price action strategy. All right. Now that we understand how this indicator works, it's time to adjust the settings and fine-tune its features to perfectly align with today's strategy. Let's begin with the market structure section. Change the internal market structure from all to charge. For the look-back period, I'll leave it at the default value of 5, but depending on your asset's time frame and volatility, I recommend experimenting with this setting. You can increase it up to 10 if needed for better accuracy. Move on to the volumetric order blocks. Enable the Show Last option and set the number of recent order blocks displayed on the chart to 8. This will give you a clear view of the most relevant levels. Finally, scroll down to the General Styling section. Adjust the internal label size to normal to enhance its visibility. Once you've made these changes, click OK to save your settings. With our indicators added and set up, let's move on to the most exciting part: how to take a buy trade with this strategy. For the first condition, we need to see a bullish chalk or chalk plus label appear. This indicates a potential shift in market structure, signaling that buyers are gaining control. For the second condition, we need to see the price action creating or entering an existing order block located below the current price action. This step ensures we're aligning our entry with key levels where institutional activity is likely to occur. And finally, for the third condition, we need to see one candlestick closing bullish above the order block. This confirms that buyers are not only present, but are strong enough to push the price higher. Once these conditions are met, we enter a buy trade. The stop loss is placed below the lower order block beneath our current order block, providing protection against further pullbacks. For taking profits, we'll use two targets. For the first target, aim for a 1-to-2 risk-to-reward ratio. Once the price reaches this target, close half of your position and move your stop loss slightly above your entry price to lock in some profits. For the second target, aim for a 1-to-4 risk-to-reward ratio to maximize your potential gains. And here's another example of a valid buy trade. The first condition requires a bullish chalk or chalk plus label to appear on the chart. This serves as an early signal of a potential market structure shift, indicating that buyers are beginning to dominate. The second condition is that price action must either create or enter an existing order block situated below the current price level. This helps us position our entry near critical zones where institutional buying activity is likely. And for the third condition, we need a candlestick to close bullish above the order block. This gives us confirmation that buying momentum is strong enough to push the price higher. Once these criteria are met, we execute a buy trade. Place your stop loss just beneath the lower order block, adding a layer of protection against further pullbacks. And for profit taking, we'll use two targets. Set the first target at a 1-to-2 risk-to-reward ratio. When the price reaches this level, close half of your position and adjust your stop loss slightly above the entry price to secure some gains. The second target should aim for a 1-to-4 risk-to-reward ratio, allowing you to capture larger moves in the market. Unfortunately, in this example, the price hit the first take profit but later reversed, stopping us out at break-even. This highlights why it's so important to take partial profits. They help lock in gains even if the market turns against you. Now, let's go over how to enter a sell trade using this strategy. The first condition is to spot a bearish chalk or chalk plus label on the chart. This signals a potential shift in market structure, indicating that sellers are taking control. The second condition requires the price action to create or enter an existing order block positioned above the current price level. This ensures we align our entry with key zones where institutional selling activity is likely to occur. Finally, the third condition is to see a candlestick close bearish below the order block. This confirms the presence of strong selling momentum, pushing prices lower. Once these criteria are met, we execute a sell trade. Place the stop loss above the higher order block, which protects against potential upward moves. For profit taking, we use two targets. The first target is a 1-to-2 risk-to-reward ratio. When this level is reached, close half of your position and adjust your stop loss slightly below your entry price to secure some gains. The second target is set at a 1-to-4 risk-to-reward ratio, allowing you to capitalize on larger downward movements. Before diving into the backtesting results, let's review another sell trade example. Start by identifying a bearish chalk or chalk plus label on the chart. Once you've spotted it, wait for the price action to create or enter an existing order block located above the current price level. Lastly, look for a candlestick to close bearish below the order block to confirm the trade. When these conditions are met, it's time to enter a sell trade. Place your stop loss just above the higher order block for protection. For profit taking, we'll follow the same approach. The first target is set at a 1-to-2 risk-to-reward ratio. When the price reaches this level, close half of your position and move your stop loss slightly below your entry price. The second target is a 1-to-4 risk-to-reward ratio to capture larger market moves. Now that we've gone through the trade setups, it's time to share the backtesting results. Just as I promised at the beginning of the video, I've tested this strategy 100 times manually on the EURUSD chart, using the 1-hour time frame, and here are the results. I started with a $1,000 account balance. I use 10% of my account per trade, adjusting as my balance changes with each win or loss. For example, if I profit $100 on a trade, my new balance becomes $1,100, and I use 10% of this updated balance for the next trade. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.